What is a dividend aristocrat? Dividend aristocrats are well known in the world of investing, but not everyone is familiar with the term. A dividend aristocrat is a company that has increased its dividend payout for at least 25 consecutive years. These companies are not only able to consistently pay out dividends, but they are also able to increase them year after year. As a result, they are highly sought after by investors who value the consistent income they provide. In this post, we will explore what exactly a dividend aristocrat is, how it can benefit investors, and the criteria a company must meet to become a dividend aristocrat. By the end of this post, readers should have a better understanding of what a dividend aristocrat is and how it can benefit them as an investor. Definition of a dividend aristocrat. Dividend aristocrat is a term used to describe a select group of companies that have increased their dividend payouts annually for at least 25 consecutive years. The dividend aristocrats are usually blue-chip stocks that have proven their ability to not only survive economic downturns and recessions, but also to increase their dividends year after year. These companies are typically well-established, mature companies with a long track record of paying reliable and predictable dividends. Criteria for becoming a dividend aristocrat. To become a dividend aristocrat, a company must have a long and impressive track record of increasing its dividend payments to shareholders for a minimum of 25 consecutive years. Companies must also be listed on the S&P 500 index and have a minimum market capitalization of $3 billion. Companies that meet these criteria represent some of the most established, reliable, and most successful businesses in the world. Advantages of investing in a dividend aristocrat. Investing in a dividend aristocrat can provide a number of advantages. First and foremost, dividend aristocrats are stocks that have a history of consistent dividend payments and have also seen an increase in dividend payments with time. This provides investors with a reliable source of income, as well as potential for income growth. Dividend aristocrats also tend to be stocks of more established, well-run companies, making them a safer investment. Additionally, the consistent dividend payouts of these companies can help smooth out portfolio volatility in times of market correction. Finally, investing in dividend aristocrat can provide a level of diversification to an investor's portfolio, as the dividend payments from these stocks are not correlated to the wider stock market. In conclusion, dividend aristocrats are an important factor to consider when evaluating and investing in stocks. They offer stability and consistent returns and are a great option for risk-averse investors. While they may not yield the highest returns, they are a reliable source of income and can help investors build a long-term portfolio with minimal risk.